It's time for another Shareplanner video blogcast. My name is Ryan Mallory, and today we're going to be dissecting my trade in BKE, known as Buckle Incorporated. As you can see here, BKE had a pretty bad opening after a miserable earnings report. Saw about 12 to 13% gap to the downside. So that was our first alert to pay attention to the stock today. Lots of volume, as you can see right here. So liquidity isn't an issue, and oftentimes when you have this much volume compared to what you see here in the previous days, there's a lot of emotions driving this stock. There's a lot of fear, panic, so the opportunity to see further price deterioration in this stock is very real. So here you have a couple of 30-minute candles with continued selling, and then around the 10:30, 11 o'clock period, you got a nice spinning top here and a little bit of consolidation. This is basically the candle that we use for our entry, our setup, and the determination of risk versus reward. So we placed our stop 1 cent above this candle and put our entry price 1 cent below. So our entry was 26.69, our stop loss was 27.02. And the next period we barely had it triggered, but it didn't do anything. In fact, it rallied up to a point to where I thought there was a good chance I might get stopped out. It went up to 26.90. Once again, our stop was at 27.02. Same case again in this period, except after it hit 26.90, it had a bit of a meltdown, going down as low as 26.52. But from there, it really didn't get much more exciting for about the next couple hours. I was definitely watching it, but as you can closely to see if I should adjust my stop loss or not, I just couldn't get a good feel for it at any point. But if you look at it though, it's trading in a pretty narrow range for much of the afternoon. If you look at it from this perspective, it could not sustain any kind of rally outside of these two lines. It did have a potential breakdown right here at this candle, but it came back up and formed a hammer, which had me a bit concerned, but nothing came out of it. But we actually did not see anything into the stock until right here, the second to last 30-minute period, around 3:20 or so. The stock just had a complete breakdown, and it was interesting because it came at the same time when the S&P was rallying. So that's the nice part of a trade like this, where you have so much emotions, so much panic in a stock, where sellers are just running for the exits, that they could care less about what's going on in the general market. So you would assume that if the market was rallying, that you might see a bit of an upward price move, but we did. In fact, we saw the exact opposite, very hard price move to the downside, and we actually were able to get out at 25.91. So that was a 2.3 R return, which is good. Needed a good winning trade like that. Back on track though, got a little bit of a groove going here, so we'll see what Friday brings and the rest of this month. But for now, we're happy about this trade, and we'll see how we do in the days ahead. Now, I probably should be dissecting a few more stocks that are losers, because I haven't done those in a while, and trust me, there's a few of those that we can definitely do some video broadcasts on, because the losers usually have more lessons to learn from than the winners. Winners, you get your profit, and usually you don't pay too much attention to the lessons that should be learned. But when you have a losing trade, you tend to pay a little bit more attention to what went wrong. So probably next week I'll have a stock that I think provides a good opportunity to look at some lessons learned on a trade gone bad. So tune in again next week. I'll have another video broadcast for you guys to look at. It'll be a losing trade, and we'll go from there. Alright, so long.